will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chalak Rastogi, Associate Director, Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone. I welcome you all to Hindustan Zinc's fourth quarter and full year FY23 ending 31st March 23 results briefing. In this call, we'll refer to Q4FY23 investor presentation available on our company's website. Some of the information on this call may be forward-looking in nature and is covered by the safe harbor language on slide number 2 of the said presentation. Today on the call, we have with us our CEO, Mr. Arun Mishra, and our CFO, Mr. Sandeep Modi. Mr. Mishra will begin with an update on business performance, while Mr. Modi will walk you through financial performance, after which we'll open the floor for questions. I now request Mr. Mishra to begin today's call. Over to you, sir.
Thank you, Jalak. A very good afternoon to all of you. Thank you for joining us today for the fourth quarter and FY23 results briefing. At the outset, I am very happy to share with you that Hindustan Zinc has achieved highest ever metal production in FY23, crossing 1 million ton metal mark, which was promised at the beginning of the year. We could do this through relentless efforts on our operational efficiencies in our smelters, backed by consistent mine metal production in our mines. With our ever-increasing silver production, it brings me great pleasure to share that Hindustan Zinc has now become the 5th largest silver producer globally. A quick snapshot of developments made in the year are given on page 6 and 7 for reference. Coming to our key priorities on safety front, in line with our commitment to ensure zero harm to employees, the leadership has undertaken the prime responsibility of providing a safe workplace for all employees entering our premises. We have started implementing critical risk management to prevent further fatalities, and it gives me satisfaction to report fatality-free operation during last 2 quarters. Safety of our people is the topmost priority for us at Hindustan Zinc, and it is our commitment to ensure that all our employees return home safely. An update on key priority. On ESG front, we continue to make progress on our sustainability journey to achieve net zero by 2050 via multiple pathways. During the quarter, we entered into another power delivery agreement with Serentica Renewables for sourcing renewable power of 250 megawatts, thereby aggregating such contracts to 450 megawatts under the group captive scheme. We inaugurated 550 tons per hour paste fill plant at Rajpura Dariba complex, which affirm our commitment towards a safe, smart and sustainable operation. I am also elated to inform you that Hindustan Zinc is transitioning towards a low-carbon vehicle fleet. We flagged off the first underground mining EV in SK Mine, first LNG vehicle for transportation, and first EV truck for carrying concentrate from mines to smelter. Hindustan Zinc ranked amongst top 5% ESG scorers in the metals and mining sector in S&P Global Sustainability Yearbook 2023. We have been featured for the 6th consecutive year, reaffirming our best-in-class sustainable practices. We have also been recognized with prestigious A rating for climate change and A- rating for water security. In addition, Rampura Agucha mine became India's first mine to be Greenko certified, and 4 of our mines are now 5-star rated under A-list category of mines by Indian Bureau of Mines. These endorsements play a significant role in motivating us to consistently march ahead on our ESG journey. Coming to an update on our on-ground CSR activities, it gives me immense satisfaction to inform that we are progressing well on our social sustainability goal. We could outreach an ever highest number of more than 1.72 million beneficiaries in FY23 through our sustained CSR initiatives. Strengthening our commitment towards education, sessions on digital literacy and life skill training were imparted to deaf and dumb students. Promoting sustainable livelihood and skill development, Hindustan Zinc's Kaushal Kendra trained successfully its first all-female batch for unarmed security guards with 100% placement at reputed organizations. Reinforcing the goal of diversity and inclusion, we achieved 19.5% gender diversity as of March 23, inclusive of all genders and sexual orientation. I would like to share that Hindustan Zinc signed MOU with Rajasthan Cricket Association for developing India's second largest cricket stadium in Jaipur. Zinc Football Academy backed second position in the Khelo India Under-17 Girls Football League, and at Rajsamand we also supported regional cricket match of Valadia Panchayat League held at Pratappura with about 150 plus participants across Udaipur. Moving on to the market, the global economy continues to remain impacted by extraneous factors, though the previous quarter did begin with optimism on the global economic outlook on account of easing supply chain disruptions and expectations of China's economic recovery, supported by positive hope on broad-based recession avoidance. However, the same was short-lived, with the potential banking meltdowns and mounting inflation in the US, supplemented by China showing few signs of strong economic recovery yet. Broader market sentiments continue to remain weak. Further, as per IMF, 2023 will be another challenging year with global growth of less than 3%, majority impacted on account of monetary tightening, COVID aftermath, and the war in Ukraine. Zinc supply and demand forces remained underperforming. The LME stock stood at 45,000 tons as compared to 140,000 tons at the start of April 2022. Whereas stocks in FHSE warehouse at the end of March stood at 97,000 tons as compared to 176,000 tons at the start of April 2022. Stocks are thus at multi-decade low levels. On demand side, there has been a fall in global consumption by 3% in 2022 amidst the slowdown of China economic recovery and possibility of US banking crisis impacting the construction and the automotive sector for the first half. Global consumption is forecast to grow by 1.5% in 2023. Touching briefly on lead prices in Q4 exhibited an improvement of 2% Q-on-Q, closing at $2,145 a ton. Global lead demand exceeded supply in 2022, with lead metal supply down by 0.7% and demand up by a modest 0.5%, predominantly in China, India, Japan, and US. However, in the first half of 2023, muted and balanced lead prices are expected, driven by faint supply and demand expectations on account of lead smelters going into maintenance in China, combined with off-season of lead-acid battery market. Coming to silver, prices have been on an upside, closing at $23.89 per troy ounce. Silver inventory in London vaults touched 6-year low levels in November 2022 and continues to trend downwards. For 2023, silver demand is expected to be bullish, driven by increasing industrial offtake, augmented by rising focus on green economy, including renewable energy products like solar cells, vehicle electrification, and investment in 5G infrastructure. On the domestic front, the Indian economy continued to show strong resilience. This was reflected in the S&P Global Manufacturing PMI in March 2023, which was at 56.4, indicative of expansion in the manufacturing activities. Q4 experienced a strong demand on account of industries maximizing output in the last quarter. Now coming to an update on operational performance. This financial year we surpassed our own records. I am happy to report mine metal production of 1,062 kilotons, up 4% year on year, and record high refined metal production of 1,032 kilotons, up 7% year on year. This was supplemented by highest ever mine development during the year, crossing 110 kilometer mark, with life of mine ventilation system fully commissioned and operational at Agucha and in progress at SK and Jawar mine. This ensures continuity of superior performance while maintaining our mine life at 25 plus years. During the quarter, our mine metal and refined metal production was ever highest at 301,000 tons and 269,000 tons respectively, demonstrating our capability to produce 1.2 million tons MIC. Record performance was majorly driven by higher ore production, improved grades, and better plant availability. We also delivered ever highest silver during the year in line with lead metal production. We entered the new financial year on the back of such stellar performances. Such resilient efforts, blended with softening input costs, enabled delivery of strong operational performance, successfully achieving the annual guidance with an EBITDA margin of 52%. Some of the automation projects like smoke hour drilling have helped increase volume with marginal operating costs. On projects front, happy to inform that our alloy plant execution is in process and commissioning is scheduled in Q1 of this financial year. For fertilizer plant, order placement is scheduled in this quarter and RD mill commissioning is also targeted in Q1 of FY24. Also, we have successfully maintained a mine life of 25 plus years with strong R&R, demonstrating an increase of 2.7% year-on-year, and factoring production of FY23, the increase is 7%. Maintaining a portfolio of mines with long life remains one of our key focus areas. Before I hand over the call to Sandeep for an update on financial performance, I would like to present our production guidance for the fiscal year 2024. We expect mined metal for the year to be in the range of 1,075 to 1,100,000 tons, and refined metal production for the year to be in the range of 1,050 to 1,075,000 tons, while FY24 sellable silver production is expected to be between 725 to 750 tons. With this, I hand over the call to Sandeep for an update on the financial performance.
Thank you, Mr. Mishra, and a very good afternoon to everyone. Supported by a consistent financial performance across the quarters, Hindustan Zinc experienced yet another record-setting annual performance, delivering historic high revenue, EBITDA, net profit, and cash flow generation. This splendid performance is an accurate demonstration and a testimony of our continued efforts on operational efficiency, volume enhancement, cost optimization, backed by agile decision-making and a favorable LME environment. All of this has enabled us in sustaining robust and resilient margins even in an input commodity inflationary environment. Coming to an update on the financial operation for the year was at a record rupees 34,098 crore, an improvement of 16% YOY. This was supported by improved zinc LME and volumes gained from strategic hedging of approximately 800 crore, favorable exchange rates, and better lead and silver volume, which was partially offset by lower lead and silver prices. Revenue from operations during the quarter was 8,509 crore, down 3% YOY, majorly on account of lower zinc, lead, and silver prices, which was partially offset by improved refined metal and silver volume and favorable exchange rates. Sequentially, revenue improved by 8%, primarily due to improved metal and silver volume, along with the better zinc, lead, and silver prices. Zinc cost of production before royalty during the quarter stood at $1,214 per ton, the lowest quarterly COP in FY23, which was 6% better sequentially, though 7% YOY in USD, 6% better sequentially, 17% higher in INR terms if we compare with the YOY. The sequentially improvement was mainly on account of better volume, improved grades, strong operational efficiencies, and supported by smoothened coal cost. For the full year, zinc COP stood at $1,257 per ton, 12% higher YOY in USD terms and 21% higher in INR terms, though well within the guidance given in October 22. The COP was up mainly on account of elevated coal prices, poor domestic coal linkage availability till December 22, and input commodity inflation, partially offset by higher volume and improved operational efficiencies. The resulting EBITDA for the full year was at record 17,590 crore, an increase 8% YOY driven by improved metal and silver volume, higher zinc LME prices, gains from strategic hedging of 800 crore, and favorable exchange rate partially offset by higher costs and lower lead and silver prices. EBITDA for the quarter was rupees 4,208 crore, down 16% YOY and up 13% sequentially. The quarter-on-quarter improvement was primarily driven by better revenues due to higher volume and prices coinciding with improved costs on account of relaxing input commodity inflation, further supported by better volume, mining grades, and operational efficiency. Please refer to EBITDA bridge from slide 23 to 25 for further details. Consolidated net profit for the year was at historic high level of rupees 10,511 crore, a growth of 9% YOY, majorly led by higher EBITDA, partially offset by an increase in tax. Net profit for the quarter stood at rupees 2,583 crore, up 20% quarter-on-quarter. The sequential improvement was majorly on account of higher EBITDA and lower tax expenditure. Effective tax rate for the fourth quarter was 26.3% and for the full year was 31.2%. The tax expense and ETR was lower in Q4 mainly on account of a one-time adjustment. As the company is opting for the new tax regime from FY24, paying tax at 25.17% instead of current ETR of 34.9%, deferred tax rate and liabilities have reinstated at 25.17%. That said, our cash tax outflow has gone up for the year due to lesser amount of accumulated net credits. Further, as well, be moving to the new tax regime from the fiscal year, our tax rate will be around 25%. I am also happy to state on record that in March 23, the board has approved an interim dividend of rupees 26 per equity share with a 1300% basis face value of rupees 2 per share and amounts to rupees 10,986 crore. This reinforces our commitment of providing superior shareholder returns continuously. Further, during the year, we contributed rupees 24,949 crore rupees to Exchequer, including the dividend paid to Government of India and associated tax of rupees 10,855 crore. Coming to our cost and CapEx guidance for the fiscal year 24, we expect our zinc cost of production to be in the range of $1,125 to $1,175 per ton for the upcoming fiscal year, which is inclusive of higher mine development expenditure to support future volume growth. The guidance is contingent on the macroeconomic factors impacting input commodity prices. Having said that, given the fact that we have maintained our leadership position in the global cost curve, we remain confident to protect and improve our margin going forward as well. Project capex for this year is expected to be in the range of $175 to 200 million. We will continue to have a focused approach to invest in strategic projects with higher IRR and towards the sustainability aspect of the business. With this, I open the floor for your questions. Thank you.
Thank you. Ladies and gentlemen, at this time, we will be conducting a question and answer session. If you wish to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. Ladies and gentlemen, we request you to restrict to one question per participant and one follow-up. We will wait for a moment while we poll for questions. Our first question comes from the line of Abhiram Iyer from Deutsche Bank. Please go ahead.
For taking my question. This is pertaining to the current cash balance that the company has. Given the fact that we paid the dividend primarily by taking a smaller short-term debt, is the company looking to use this cash for any inorganic acquisition, or what's the sort of medium-term goal here?
So the currently company, any acquisition which will happen will be on the basis of the board approved decision and any valuation or due diligence done. Given the fact as of now our focus is to invest in the fertilizer and roaster projects, and currently the company is 10,000 crore of the gross investment in cash and cash equivalent, and the borrowing is smaller, and compared to the borrowing, our quarter one cash flow should be basically recouping the whole whatever the negative we are having. And if you see our guidance which we have given, I am sure you can do your math and comfortably we can generate in a annual more than 10,000 crore rupees of the cash flow.
Got it. So broadly, this is not going to be the debt. The short-term debt would then be converted to a more longer-term debt, because as per your statement, it was roughly around 11,000 crores.
Yeah, so we don't intend to do any short-term to long-term, given that our cash flow position, which I am again saying that reinstate our position of the cash flow generation, and historically we have been generating the cash flow, we should be able to pay within this financial year.
Got it. So, and just a follow-up to that, could you just give the nature of investments which are present? Are all of these liquid investments in mutual funds?
I think that is not a standard disclosure, but we invest in the high-quality debt instruments as per our investment policy.
Got it. So thank you very much. I'll get back into you.
Thank you. Our next question comes from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Congratulations for a good set of numbers, and thanks for taking my question. My question is with respect to the mine metal production guidance. So if I look at your guidance, I mean, it is the upper end of guidance is also at 5% high YOY. We have hit the mine metal rate of 1.2 million tons in this quarter. While I understand that, it's not that every quarter is uniform, but just wanted to understand why we have given such a subdued guidance, and what are the key enablers for us reaching 1.2 million tons per annum, and when we will reach it?
So if I can remind you, we started off the discussion of the growth project as 1.2 million ton MIC. So while we can still produce 1.2 million ton MIC, what we have demonstrated in quarter 4, our focus going forward is actually moved from MIC to finished metal. So we are looking at now putting one roaster, and then we will try to do some debottlenecking of the leaching circuit to actually build up a capacity of 1.2 million ton. So our immediate focus is to, with the available capacities, produce more than 1,100,000 tons of metal first, and then whatever is that metal that we produce, correspondingly back up by MIC production. So that's why the numbers are set. The focus moves from MIC to metal. So somewhere around 1,050 to 1,075,000 tons of metal if we can produce, then we have calculated the MIC accordingly. Otherwise, with the roaster and few debottlenecking in the leaching, we will be able to go to that 1.2 million ton metal capacity instead of talking about MIC capacity.
Okay, just a follow-up. So when can we expect to reach this 1.2 million ton in metal then?
After this roaster, we are taking, say, 18 months of commissioning from the time of construction, which will begin somewhere in June or July, then another 18 months. So maybe FY25, 24, 25 or 25, 26, one of these 2 years should be close to 1.2 million ton.
Okay, thanks a lot. I will get back into queue.
Thank you. Our next question comes from the line of Love Sharma from Lombard Odier. Please go ahead.
Hi, thank you for taking the question. I had a question about, I think from this year, from FY24 onwards, you're going to pay some brand and royalty fee. Can I understand if that amount has already been paid in April? And if so, how much is that? And just a related question would be, is it paid directly to Limited or to the parent PLC? Thank you.
There's some background noise, but I'm sure you are trying to ask what is the brand fee expenditure. So during the year, the brand fees was approved from the 1st October. So this financial year, you see the impact of 318 crore, and the next year will be depending upon the turnover. It will be 2% of the turnover. But roughly, it should be between 650 to 700 crore.
Okay. Thank you. Can I ask one more question on the GE to retained earnings conversion? I know that you got the shareholders vote for that. Do you still need any other creditors vote to happen, or is the process pretty much done and only NCLT approval is remaining?
So all the processes have been done, and there is a formal procedure going for the second motion to the NCLT, which has also been filed on the 10th April by Zinc. And once it is done, then it will require a board approval. So no separate creditor approvals are required.
Okay, and what is the date, for the NCLT meeting, you say? The NCLT approval?
So we have filed on the 10th April. So NCLT, whenever it will give the hearing, then only we can comment upon that.
Okay, understood. Thank you so much. Bye.
Thank you. Our next question comes from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thanks. My first question is on the dividend payout. Now, given that we've moved to a marginal net debt level, should we expect dividend payouts to be restricted by the cash flow, or we are also okay by taking more debt and pay higher dividend like we did in FY23? And also, given our FY23 payments was much beyond our cash internal accruals, I mean, should we consider this as, front-loading of FY24 dividend in FY23, given that you commented that FY24 cash flows will be used to repay the short-term debt?
So thanks for the question. So first of all, dividend payment is, I think, a board decision. So whenever it will happen, we will come to know. Obviously, any decision which will be taken up by the board, it will be depending upon the strong financial management. So I am sure board will consider all these facts before approving any dividend which will happen in the future.
Okay, all right. And just one last thing on this Zinc International acquisition, is it completely on the back burner called off, or there were reports that the government is suggesting that we should consider other payment terms like some non-cash method of acquiring, or something of that is under consideration?
No, so all we can comment here is that Zinc International acquisition was a great idea. We have got the board approval and we have filed it in the stock exchange. There is a letter which has been received from government where their majority of the minority shareholder, their view is in public place. So we are working on it, and we still believe that this is something that we must do for the sake of Hindustan Zinc. So we will see where it ends, but we are very hopeful and we are on the job all the time.
So as of now, it's not been called off; it is still under work, right?
No, unless the board passes a resolution withdrawing this, till that time it is not called off.
Okay, thank you and all the best.
Thank you. Our next question comes from the line of Rahul Jain from Systematics. Please go ahead.
Yeah, hi. Thanks for taking my questions. Two things. One is on the cost of production that you have mentioned. Does it include the brand fee? And secondly, we have given some reduction in cost, which I think could have been a lot higher because the way coal prices have come off. And can you give us some color as what has been our coal procurement cost and how we see going forward? Thanks.
So Rahul, thanks for the question. The cost which we report to the market is the V1 cost, which is for the conversion cost, total cost of production, but that does not include the brand fee. Second, coming with the cost of coal. If we talk about that, as we said in the last quarter, that we were having certain high cost coal inventory. Obviously, that was taken for decision for the purpose of protecting the coal for the purpose of production. That has been depleted, and our coal cost has gone drastically reduced. And that's why you see compared to quarter 3 versus quarter 4, $80 cost reduction. And we believe that current import coal prices are around $150 to $160 per ton for the import prices. And we have also got the almost 26% linkage coal in the last quarter 4, and I'm sure this will continue. With that, we are quite confident that this guidance, whatever we are given for the cost, we are achievable. And given that our volumes will be also higher, and since our 30 to 35% cost remains semi-variable or largely fixed, the volume benefit will come to us.
So just one more thing to add to that. We also have a captive coal mine development. Any progress on that?
We don't have any captive coal mine development, Rahul.
No? Okay, fine. Yeah. Thanks.
Thank you. Our next question comes from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Thank you. So my first question is, if you look at Hindustan Zinc balance sheet, it has materially weakened from its peak days of having a very large net cash balance. Now the gross debt is closer to 12,000 crores. So at this point of time, what is the management view on the debt on the books on a gross basis? Will management use the operating cash flows to reduce the gross debt on its books, or should the debt increase through the course of FY24?
So I will say directly that this, as I answered for the earlier question also, at the current level of the guidance, and we are sure that we'll achieve this guidance 100%. And as I take the current LME level also, we are comfortably should be able to generate the cash flow 10,000 crore. And if you are bifurcate in the quarters also, we should be by May end, even we should be able to recoup the whatever the margin is 1,700-1,800 crore, and that debt is there. Coming back to this cash flow generation, I am sure at the March end, we should be able to, in the position if we generate the 10,000 crore rupees of the cash, it will get netted off with the debt.
But sir, that will only happen if there are no dividend payouts, right, in the course of FY24. Because if the company pays out dividends, then effectively this debt balance won't come down, right? So are you saying that the dividend payouts will reduce from here, and hence the cash flows will be reserved to reduce the debt?
So I would like to answer in a different manner also. First of all, dividend is a board decision. So whenever it will happen, you will come to know. And secondly, even something happens from the dividend point of view, you will always have a investment against those whatever the borrowings are there. So you will never be in a position where, like you are saying marginally, that because the retained earning is also now limited. So that retained earning, whatever is there, we won't be able to give the dividend beyond that retained earning.
So just to simply ask you don't expect on an absolute basis Hindustan Zinc to pay down the debt, right? Or would you reduce on an absolute basis the gross debt that is sitting on its books?
Our target is to reduce the debt as per whatever the maturity is coming from the generating of the cash or the investment which we have in our books.
Understood. Thank you very much.
Thank you. Our next question comes from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is, what is the exact quantum of retained earnings as on 31st of March, please?
Hi, Ritesh. So exact quantum of the retained earning, excluding the general reserve, is 1,700 crore, and general reserve is 10,384 crore.
Perfect. That helps. So second question is, when we look at the holding at Hindustan Zinc, we find 88% either pledged or encumbered. Sir, can you please detail what this corresponds to, and how should we look at this number? Can it go down going forward, or are we okay with this number at 88%?
I think pledge of the shares is something in the hands of the Vedanta. I don't think we can comment upon this. What we read in the media is that today that 91% of total is there. I think there is something non-disposal undertaking or some things are all there. But I think me and Mr. will not be in the position to comment upon that part.
Right. But sir, is it pledged or is it encumbered?
Please, this is something to be asked. I think in the result after board meeting, they will be open up for questioning. It is better to put that question there.
Sure, sir. Sir, any update on the OFS?
Update on the OFS? So no, right now I have not heard. And since we were expecting before March 31st, but it has not happened. I'm sure government will be looking at some suitable opportune time in the market. When the market will have the capacity to absorb, then they will release maybe.
Right. And sir, hedges last.
Ritesh, sorry for the interruption. If you could please join back in the queue. Our next question comes from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for the in terms of the capital projects ahead, apart from the fertilizer and the roaster plant that we are discussing, are there any other projects on the drawing board at this stage?
Of course, we have our next target will be 1.5 million ton. It may have its internal, some stage of 1.35 million ton before actually going to 1.5 million ton. So maybe another 1 month we should be able to come clean on what would be the next dates, when should we launch the project, what will be investment outlay. So all that we are on the drawing board, we are close to finalization now.
Thank you, sir. And if you can clarify the hedges, what Ritesh was asking.
So as of now, we don't have any open hedge position.
Thank you, sir. That's about it.
Thank you. Our next question comes from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Thanks for taking my question again. Just wanted to understand the grade of ore in this quarter and how does it compare QOQ?
So Amit, the grade of ore this quarter was 7.42% compared to the last quarter of 6.96%.
Great. Thank you. That's it.
Thank you. Our next question comes from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi, sir. Sir, one question. The brand fee element which is there, does it accrue to Vedanta India or does it go to the parent?
It goes to Vedanta Limited, Ritesh, as we already disclosed in our annual results also last time. The brand fee agreement has been signed with the Vedanta Limited.
Perfect. And so just one question. Hypothetically, GR to RE will come through, you get another 10,000 crores of leeway on the books. What is the ideal capital structure that you would be comfortable with?
I think this is a forward-looking thing. We will have to see what will be the ideal, and I think year to year, what will be the manner of the use. It is up to the board, and whenever it will happen, I think we'll be able to comment at that point of time.
Sure, sir. This is helpful. Thank you so much.
Thank you.
Thanks.
Thank you. Our next question comes from the line of Abhiram Iyer from Deutsche Bank. Please go ahead.
Yes. Hi, sir. I'm just wanted a clarification on the difference in gross cash mentioned in the presentation, which is around 10,000 crores, versus adding up the investments, cash balances, and bank accounts in the balance sheet given, which is around 11,300 crores. Any particular reason why the 1,000 crores is not being accounted for as gross cash?
I'm not sure where you are seeing the 11,917 crores is the debt we are having, and 10,061 crores is the gross investment in cash and cash equivalent.
Yeah, and what I'm saying is if I add up the investments, cash, and bank balances given in the balance sheet, I get 11,200 crores. So it's just asking.
Okay. Yeah. So I got your point. So there are certain unpaid dividends because if you see the way this deposited the dividend on February 1st, so there are certain dividends account which is there in which the dividend money is there, which is a restricted cash which we can't use because that is funded for the dividend purpose.
Understood, sir. And this would be part of the bank balances, is it?
It would be part of the bank balance, but not for but at the same time there will be a dividend liability sitting on the liability side.
Understood. Thank you. Thanks for the clarification.
Thank you. Our next question comes from the line of Pallav Agarwal from Antique Stock Broking Limited. Please go ahead.
Yeah, good evening, sir. So, just on the guidance for silver production, so we were targeting about 1,000 tons, some time back. So, but even for the next year, we're just targeting about 750 tons at the upper end. So is the lead production a constraint, or when can we actually achieve this 1,000 tons of silver production?
No, so fantastic. I must appreciate your question. This has to do with, absolutely, you have hit the nail on the head. Our entire operating flow sheet is comprising of zinc plus lead as a medium of production in the pyro. And instead of doing only lead production in the pyro plant of Chanderiya. Whenever we do this, we always have lead MIC getting unconverted to metal, and that is lying in stock. Even last year also, we ended up with having a lot of lead MIC in stock, which if we could convert, we could have produced some more silver. But we always preferentially use SK mine lead concentrate to maximize the silver production, with the strategy we adopted this year. Going forward, we have to unlock the lead production. To unlock the lead production, we have to increase the zinc production capacity in the existing circuit. That is where the investment in roaster, and it will be followed by some debottlenecking proposal in the leaching circuit. Then in the pyro can operate only in lead mode, and then the 750 number perhaps it go to 800 or 825 kind of tons once we do that. So which is within 1 year away.
Sure, sir. Also, in terms of, you mentioned the project capex, but what about, what is the normal maintenance capex levels, that we incur every year?
It will be around $400 million.
The total you're talking about, or it will be 400 plus 200?
400 plus 200.
Sure. And this covers the, any expenditure on fertilizer and other projects as well?
So $150-200 million primarily comprise of fertilizer and roaster and RE power investment, and $400 million is largely pertaining to mine development and mining equipments.
Sure, sir. Yeah, thank you. That's it from my side.
Thank you. Our next question comes from the line of Vishal Kulkarni from SNP. Please go ahead.
My question is about your cash management generally, because in the past we have seen some cash in the form of unquoted mutual funds and perpetual securities. Can I understand how easy this is to liquidate when you have to, let's say, for dividends or any other purpose? That's the first question. And second, on the status of your transfer of retained earnings to general reserves, where do we stand on that one? Thanks.
So if you see the investment, investments are quite liquid whenever we want to sell. And while it is a long-term investment remain in the market, but however, we have been able to liquidate, and we also can have a repurchase borrowing from these investments. So beyond that, I won't be able to comment upon the investment part. And GR2 RE, I think I already answered that 10,384 crore is there. And the second motion has been filed in the NCLT on the 2nd April, and we await the hearing from them.
Okay, thank you.
Thank you. Our next question comes from the line of Ritesh Shah from Investec. Please go ahead.
So thanks for taking the question. Sir, I just want to rewind a bit back. This is pertaining to Hindustan Zinc International transaction. I just wanted to understand, sir, how will the flow of capital work? To my limited understanding, I think that we had taken an approval to create a wholly owned subsidiary, an overseas subsidiary. I think it was called HZWOS. And then basically we had to subscribe to the shares of Zinc International, which was THL Zinc. And this was like up to $3 billion, 2.98 to be precise. So I just wanted to understand, sir, how will the capital flow? So you have an overseas subsidiary which has been created. So does the money flow from India to that particular entity and then to Vedanta? How does that work, sir?
Till now, we have not incorporated any wholly owned subsidiary. It is part of the whole proposal. Since the proposal is yet to be approved, how can we create the subsidiary?
Okay. But sir, hypothetically, if it had been done, how would have the money flowed?
Oh, money, if hypothetically will happen, it will happen from here to wholly owned subsidiary and wholly owned subsidiary buying from THL Zinc. But till now, I think will be able to comment, given that it is not yet approved by the board, yet not taken up from the shareholder purpose.
Okay, sure. Thank you. Thank you so much. Thanks.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session, and I would like to turn the conference over to Jhalak Rastogi for closing comments.
Thank you, everyone. With this, we close today's earnings call. For any follow-up questions or clarifications on the results, please feel free to reach out to Investor Relations team. Thank you.
Thank you. Thank you.
Thank you. On behalf of Hindustan Zinc, that concludes this conference. Thank you for joining us. You may now disconnect your lines.